But even with lower headline inflation than the pre-inauguration peaks, the lived experience is punishing. Jules, Buenos Aires correspondent, said people are really struggling and not having enough money to actually live. Middle and working class households feel it in rent volatility after rule changes, in supermarket bills that now reflect fewer price controls and trimmed subsidies, and in the nagging uncertainty about the peso's true value. Many keep dollars as a lifeline and spend pesos quickly. Small and mid-sized businesses, stripped of subsidised cushions, are closing in greater numbers than before. The cultural impulse to gather and go out still resists the economic gravity, but it can't beat it every weekend. The policy constraints are also familiar to anyone who followed earlier reform waves in emerging markets. Milei doesn't command a blank cheque in the legislature. Privatisation plans and tax code rewrites need votes he doesn't fully control. This is why political signals, midterm results, coalition gestures, external financing carry outsized weight. When Washington offered an economic stabilisation support package earlier in the year, local analysts described it as a financial and psychological lifeline. Dollar reserves help enforce a more stable path for the peso. Credibility with creditors nudges risk premia lower. But lifelines are not destinies. The sustainability test arrives when large-ticket external debt falls due in 2026 and when patience on the street meets the timeline of reform dividends. Markets, for now, are voting with cautious optimism. That aligns with the textbook sequence. Fiscal consolidation first, some deregulation, some foreign capital. Then, if the social contract holds, growth and disinflation take firmer root.